All right, folks, interest rates said, been on the rise, and what does this mean for many aspects of your life has been a focus for the past couple weeks. Today, I'm going to talk to you about your savings account, as your savings account is an interest and positive out of interest rates rising. So I'm going to focus there today. So most people I know and come across have, if they have the 3 to 6 months in savings, and sometimes people have substantially more for whatever reason. It's their comfort zone, market volatility, or just they have projects coming up and they want to be prepared for it. Okay, great. So most people I see leave their cash in their bank savings account or even checking account. With interest rates rising, as we know, about 0.25% recently, this can benefit your savings account, depending where you keep it. So, for instance, Wells Fargo today has a savings account they're teasing at 0.01%. 0.01%. Inflation's about 7%. 0.01% is literally nothing. And I mean nothing. And nothing wrong with Wells Fargo in general. That's not their bread and butter. However, when you look at a 0.01%, that comes out to $10 per $100,000. I mean, you could argue you're better off leaving it in a safe in your house. There's virtually no benefit to these savings accounts. However, there are these online banks, online-only banks, and depending on your generation, it takes a little comfort zone getting there. I get it, right? Because a lot of people, an older generation, like to walk into a brick and mortar and knock on the walls and feel that they're there. However, these online banks are still FDIC insured, $250,000, backed by the Fed and the government. So there's no real concerns there. And candidly, most people have online banking even for their brick and mortar banks. And the way these banks work is they attach their savings accounts that attach to your checking account. So I have it's called a TD checking account, and a Capital 360, Live Oak Bank, which is one of my favorites. There's Ally Bank, Marcus. There's a lot of banks out there that operate in the space. What happens is you attach your TD or Wells or whatever your bank is, you attach it and connect it to this online bank. And just like you would typically transfer money from your checking to your savings at Wells Fargo, TD, or Bank of America, you transfer instead of internally, transfer it externally. So it connects to your checking account. If you have $50,000 extra dollars there, you transfer it to your online savings account at another institution. And now instead of 0.01% today, for instance, Live Oak is paying 0.6%. Don't get me wrong, this isn't your retirement plan, but it's $600 per $100,000 versus $10. And these rates will continually climb as interest rates are on the rise. There's no question that you'll see multiple times this year, especially these online banks, they're very competitive in this space. So they'll try to compete and keep raising their rates accordingly to get your dollars there for savings. Dollars are secure. Dollars pay a higher rate. If you don't want that extra $600 or $590, give it to me. I'll take it happily. Or I got plenty of other people that would gladly take those extra funds by spending 10 minutes to go on your computer, open up a little online account, and transfer. What are things to look out for, though? So one is sometimes these, again, they're all competing for the same dollar. They'll give you teaser rates. So read the fine print. I had a client said, "Hey, Andrew, look at this one. It's so fantastic." And it was, a 1% rate, and it's only on your first, it was like $1,000, and then it goes down substantially, and that's only for 3 months. And so you got to read the fine print. Additionally, excuse me, you only have so many transfers per month. Again, that's never an issue unless, who's transferring on a daily basis? You aren't. So maybe you get 10, 20, 30 transfers a month. More than enough. I just transferred, because the taxman's coming, I just transfer money from my savings to my checking, and it's a one-time thing, not a big deal. So these are things to keep a lookout for, but trust me when I tell you, a dollar saved is a dollar earned, a penny saved is a penny earned, in the old words of Benjamin Franklin, and take advantage of it. If you want any help or guidance on my favorite ones, again, feel free. I mentioned some today, but feel free to shoot out. As always, I'm Andrew Rosen, president of Diversified. Stay wealthy, stay healthy, and stay happy. Take care.